From the floor of the CME Group, this is Danny Riley on this Wednesday, October 6th. Markets are firm today. I was going to start out saying they're quiet, but they're not. They actually were kind of busy on the open. We saw several very big players. Credit Suisse came in and bought 1,000 big S&Ps on the open. After that, they bought another 1,000. DT Trading, the company that we used to clear through, bought 500. And then JP Morgan bought 500 and then sold 1,000. So there's a lot of big trading activity going on in the big S&P pit this morning. But we're going to talk about a couple of things. One, the ADP number came in negative 39 versus plus 24. That's a big number, but that did not seem to affect what was going on in the index markets this morning. The markets opened steady to a little higher, rallied up to 1158, sold off down to 1155. Yep, three handle range here, and then eventually made its way back down to 1154 half and then 1154.20. There's nothing going on as far as the range is concerned, but when you look at what's going on in the NASDAQ versus the S&P, at one point the NASDAQ futures were down almost 19 or 18 ticks while the S&P was up $1.50. So that tells us that there's some type of buy NASDAQ sell S&P thing floating around. Some type of sell NASDAQ buy S&P thing floating around, but it has not affected the S&P's overall tone at all. Once the NASDAQ started to short cover a little bit, the S&P futures went straight up with it, and it tells us that the markets are still firm. We don't really know what to think here. The markets have gone so far with so little pullback, and the days that the S&P does pull back, the net changes are so small, down 3.5 handles, down 6.5 handles, down 4 handles. There is no down 25 or down 30 handle days. You would think after a big run-up we'd get something like that, and we almost think that the bears and the bulls are kind of expecting something like this to happen. But really what's going on here is there's a mad chase to chase returns as we go into the last quarter of the year. With the S&P up almost 9 or 10% last month, the mutual funds and investment firms alike are pouring money into the S&P. We see it. It's coming in through either in the cash or it's coming in the futures, but we see these big orders hitting, and to us it tells us that it's probably easier to just buy the S&P than it is to go out and pick into different sectors in the stock market and try and figure out what stocks are best to be bought. Now, one of the things that we want to talk about, and we'll make this quick, is that Fari Hamzy came out yesterday on the Instant Message. He's an algorithm trader that pointed out that his put-call ratio had gone down to 12. The last time that this happened, he reminded us it got down to 08, and when it happened that day or the next 4 days, the S&P dropped a total of 49.5 handles. So while we are optimistically bullish, we are on a kind of a concerned note that as we go into the end of the week with the API numbers or the ADP number the way it is, that maybe there could be some kind of surprise going into Friday with the market up so much, everybody kind of long into the rally type stuff. But as far as the rest of the day is concerned, we're not here to fight City Hall, and the markets are firm again. We'll be back tomorrow.